Hello everyone, welcome back to the channel. We are witnessing one of the worst days in IBM's history. The stock is down about 20 to 25%. You can find a lot of posts on Twitter about what was said on that letter, but I'm making this video today specifically to talk about all the unsaid things that the market heard due to which it reacted so badly. Because the miss on the number was only a 4%, then why are we seeing a 20-25% drop on the stock? So we're going to break down everything that was said and understand what the market reacted to. The one word that I will mention over and over again in this video is going to be uncertainty, because uncertainty is what market hates, and that is the biggest reason the stock has declined so far down. So with that said, let's jump on and let's talk about where this all started. A few days ago on July 8th, everything was going just fine. It was business as usual. IBM publishes that it will report their Q2 earnings on July 22nd, and everything is just fine. All of a sudden this morning at 6:50 a.m. we get this major downgrade from HSBC. They're saying that they're cutting the target to 191 from 231, and this was a little bit of a shocker but a very interesting coincidence, because right after that, about 15 minutes later, we get this preliminary Q2 results, and all of a sudden the stock drops 20%, and after market open it continues to slide lower. So this all happened within 20-minute time frame from the downgrade and then to Krishna's letter, and then the stock drops. So here's the thing, the miss on revenue was only 4%. The stock dropped 25%. Only 660 million was the revenue number that was missed. EPS missed by 9 cents only. That was a 3% miss there. Operating profits actually grew. So the question is, where is the rest of 21% coming from? So let's break down everything that was said in the letter. As it says here, same letter, two different languages. Let's break this down one block at a time. They said that they were sharing the results early in spirit of transparency, but that is a big question mark because market does not like uncertainty. Companies don't go ahead and report early just because of 4% miss. They are trying to build cushion for what is coming next on the 22nd of July, and the market is really worried about it because nobody likes a warning, because nobody knows what is to come next, right? And as I mentioned early in the call, uncertainty is something that market does not like. We'll discuss full year expectation on July 22nd call. That is another thing. IBM is a company that reaffirms their number quarter over quarter, and this time they decided to stay quiet. Market does not like that. Stock declined because of that. The next thing is, this quarter we faltered. And this might look really good that the CEO is taking accountability for it, but realistically, that is not a good thing, because if there is a problem, CEO sees it, it cannot be fixed in one quarter. You need time. It takes a few quarters before you can redirect the ship in a different direction. They also said that numerous large deals didn't close on the timeline we expected. The question is, if they didn't close this quarter, when are they going to close? Is it going to be next quarter? Or are all of these deals actually dead and only time will tell in next quarter or two? So we got to watch out for that as well, right? More uncertainty added to the previous uncertainty. The next thing is, final results could differ slightly from these figures. And that's actually really scary, because you took the time to report these numbers early before the earnings actual date. Then what does different really mean? Is it going to be worse? They also said that they're investing aggressively, 10 billion in quantum, 5 billion in Lightwell. The question is that we're just talking about the quarter miss. How are you going to do more investing out there when you don't even know what we're going to do this quarter and what's the strategy to fix the next quarter? So there's more uncertainty there, right? A strong start to the year, April 22. This is something that was said after the Q1 beat. They were right on track, and all of a sudden now, just 90 days later, we're reporting early numbers just so we can cushion the actual earnings. So that is another piece that looks very uncertain to the markets. And I put this last block just for some caution, because they said a challenging quarter, but they have clear actions underway. And there's never just one cockroach. So if you see a cockroach, there's probably more somewhere in the house, right? So we don't know what is going on in the back end. I know they've said all of these things in a way where they'll give the market some confidence, but realistically, market is reading this all as just uncertain things, right? So let's talk about why we dropped 25%. The first 4% is the actual miss. We understand. The next one is the dead guide. 5 to 6% is taken off because of that. Then there's execution doubt, which is another 5 to 6%. Sector regime fear, the AI capex squeeze is a serious issue, and that's another 5 to 6% drop on the stock. And then flow mechanics, which means once the stock slides down this bad, there's liquidity issues, there's margin calls, and momentum starts shifting to the downside. So that's your entire 25% drop, right? I'm trying to justify it on a slide so it kind of makes sense. Let's discuss the blast radius of this entire thing. Obviously, IBM dropped 20% pre-market, and then we also saw a drawdown on Salesforce, Microsoft, and the IGV ETF by itself. Microsoft has retraced somewhat, but we still have to see this week where the stock stands, right? This drawdown on IBM has created a lot of questions, and I wanted to put 4 or 5 of them out here for you. So if IBM warned first, who is next? If clients everywhere rated software budgets in late June, every enterprise vendor reporting this season carries the same risk. So are all contracts getting pulled because they all want to invest in AI capex, the hardware side? What happens to the software side, right? Software just proved it's deferrable. It shows that SaaS is not the priority right now. Clients are pausing purchases to buy memory chips. In my last video about MU, which is Micron, we discussed this, right? We're sold out everywhere for the whole year. And that takes me to the next point. The memory capacity is effectively sold out all of 2026. And the same thing is happening to 2027, but we'll just have to see when the year comes around, right? Are all companies rating their budgets from different buckets like software and other things to fulfill their hardware capacity? If that is the real case, then AI flipped from tailwind to a wallet competitor, which means we thought AI will improve margins, will be able to do more with less, but in this case scenario, it shows that the thing that was supposed to reduce cost and improve profitability is taking away money from all different sorts of budget. It is breaking the entire structure of how budgeting is done. So this is a big problem. If there's anything to take out of this video, this is the one thing that I feel like we need to wait and see what happens, because that changes how we're pricing this market. And lastly, the sector was already bleeding. Obviously, Oracle was down, Accenture was down, Microsoft was down, and this is just adding more fuel to the fire. So these are all the unanswered questions, right? And goes back to what I said. The market is super uncertain about what's going on, and this just needs time. This is not a stock that you can buy off of liquidity sweep. This is not something that you can just buy a dollar cost average and hope it reverses. Things might actually change and things might actually break. We need a lot of answers. When the earnings on 22nd come around, we need to know what is the full year guide. Are the deals deferred or are they actually destroyed? Is this just for one quarter or is it going to continue? Is the machine actually broken or is this just slowing down? Can we shift this in 2 to 3 quarters? Do margins and cash keep holding? That would be another big question, because if margins also start coming down, we got a big problem. So with that being said, I really hope you found value in this video. You saw this picture from a different lens than what everybody's talking about. And if you like the content, please leave a like, subscribe to the channel, and I'll catch you on the next one. Thank you so much for watching.